Welcome to This Explainer. Today, we're popping the hood on Patria Investments and their Q2 2026 earnings report. Look, if you follow the Latin American alt asset space, you already know Patria is an absolute powerhouse. But today, we're skipping the basic PR spin. We're going to dig right into their SEC filing to see exactly what's driving their growth, how they're printing cash, and most importantly, what all of this means for the future.
Okay, here is our game plan. We'll hit the Q2 headline numbers, demystify that revenue engine, look at their AUM and strategic growth, check out some fund performance metrics, talk about those dividend payouts, and then wrap up by looking ahead to the rest of 2026.
So let's jump right into part one, the Q2 headline numbers.
Right out of the gate, here is a massive takeaway. By the end of Q2 2026, Patria's total assets under management hit a staggering $62.1 billion. Now get this, that is up 28% from the exact same time last year. Seeing that kind of year-over-year asset growth in the alternative investment space, it's a flashing green light telling us their fundraising and strategic acquisitions are literally firing on all cylinders.
And here is where it hits the bottom line. Growing assets is great, sure, but growing the profits you can actually hand back to investors, that's the real magic. Their distributable earnings skyrocketed by 31% year over year, landing at $50.7 million for the quarter. That breaks down to 32 cents a share. It is just a hyper-efficient conversion of asset growth into real, tangible shareholder value.
Moving on to part two, demystifying Patria's revenue engine.
First up is fee-related earnings, or FRE, which came in at $57.1 million this quarter. Basically, think of this as Patria's reliable, recurring subscription revenue. They earn this just for managing client money. Since it's not at the mercy of wild market swings or one-off trades, it acts like a massive anchor for the company. It smooths out the revenue, makes cash flow super predictable, and frankly, takes a lot of risk off the table.
Then we have distributable earnings. We just mentioned that 50.7 million figure, but let's define what it actually is. This is the absolute crucial metric that tells us what chunk of the profit is actually safe to pay out to shareholders as dividends. It strips away all the non-cash accounting noise and required reserves, leaving you with the true cash-generating muscle of the business.
Honestly, the best way to think about it is like the money left over in your own household budget, after you've paid all the bills and tucked away your emergency savings. It's pure, free and clear cash that management can confidently hand out. And when that number is jumping by 31% year over year, well, the financial house is in incredibly good shape.
All right, let's look at part three, AUM and strategic growth. So, what is fueling this revenue engine? The most vital metric isn't just the total assets, it's the fee-earning AUM. This is the actual client money on Patria's payroll that's actively generating fee revenue. Look, if an asset isn't fee-earning, it's not paying the bills, right? So tracking this specific capital pool is basically your crystal ball for future earnings. And the trend here is just phenomenal. Over the last year, Patria grew this critical fee-earning base by 32%, swelling from $37.2 billion all the way up to $48.9 billion. That means a drastically larger base of capital is now spinning off those steady, subscription-like management fees we just talked about.
So how did they get to that $48.9 billion? Well, this wasn't just organic capital flowing in, though, to be fair, there was plenty of that. It was massively accelerated by some highly strategic M&A. Case in point, their acquisition of WP Global Partners alone bolted a massive $1.7 billion onto their fee-earning total. They are aggressively scooping up complementary platforms to scale fast.
When we break down that $48.9 billion, it's clear Patria is heavily diversified. They aren't putting all their eggs in one basket. GPMS, which is their global private market solutions, and their credit division are the biggest slices of the pie right now, both sitting at around $13 billion. That diversification is a great shield. It protects the whole revenue engine if any single sector takes a hit.
Let's slide into part four, fund performance metrics. Investors are definitely buying what Patria is selling. They poured an incredible $2.35 billion in new capital into the firm in just this one quarter. And check this out. That was spearheaded by a massive $970 million allocation into a multi-asset separately managed account from a major sovereign wealth fund. When sovereign wealth is writing checks that big, you know it's a huge vote of institutional confidence.
On top of that, thanks to some stellar long-term fund performance, Patria is sitting on $238 million in net accrued performance fees right now. That shakes out to about $1.49 per share in future value. Think of this as dry powder. It's fees they've earned on paper through smart investments, which will eventually be realized and drop right down to the bottom line as those funds mature.
Okay, part 5, the dividend payouts.
Because of those rock-solid distributable earnings we went over, Patria declared a quarterly cash dividend of 16.25 cents per common share. Since their revenue engine leans so heavily on those predictable management fees, management clearly feels confident passing a big chunk of their profits straight back to you.
If you're keeping track for your own portfolio, here is the timeline. The dividend was declared on July 31st, it goes ex-dividend on August 10th, and the actual cash will land in eligible accounts on September 14th, 2026.
Now here's why that matters, the yield. At a recent share price of $10.68, that 16.25-cent quarterly payout works out to a really attractive annualized yield of about 6.5%. But here's the kicker, with a dividend cover ratio of roughly 2.0x, their income is covering that payout twice over. So it's not just a juicy yield, the math shows it's actually a very healthy, well-supported one.
Finally, part 6, looking ahead to 2026.
CEO Alex Tsai was definitely not holding back his confidence in the earnings release. He pointed out that their year-to-date fundraising has already hit $4.5 billion. That momentum is so strong they're actually on pace to completely smash their initial full-year targets. The money just keeps rolling in.
So, what's the playbook for the rest of the year? It's pretty straightforward. First, keep that fundraising momentum going. Second, fully integrate those new acquisitions, like WP Global and Solace, so they start humming efficiently under the Patria umbrella. And third, nail that full-year fee-related earnings target of up to $245 million. From what we've seen in Q2, they are totally on track.
Which leaves us with this final thought. When you look at their aggressive, highly successful M&A strategy, the massive organic asset growth, and their deep roots across multiple sectors, is Patria's engine poised to completely dominate the Latin American alternative asset landscape in the years to come? The Q2 numbers definitely make a compelling case. Thanks so much for joining me for this explainer, and we'll catch you next time.